So you are managing money. And tell me, why do you do it? How do you do it? And how are you doing it differently?
What Bias Capital is doing really is identifying companies across a few sectors in India, understanding them from a bottom-up standpoint, from a top-down standpoint, and then also understanding where they want to go in the next 3 to 5 years.
Okay.
Because the difference between public market and private markets is in public market you want to see progress over the next 2 to 3 quarters, right? Even though you're investing with a long-term horizon, you want to invest in the next 2 3 quarters. So that's how we think we're doing it very differently to a normal public market fund, applying a private equity lens, focusing on a few sectors, and then creating a very time-bound analysis of where we want to be.
Okay, let's simplify it for our viewers. When you say you are a bottom-up investor, you look at companies, you don't look at macros, you don't look at interest rates, you don't look at rupee, you don't look at what's happening to inflation. Is that how you approach investing?
We look at everything.
Okay.
We look at what's happening in the US markets. We look at global markets. For example, the price of oil drives our thought process. The price of oil is the one macro trend in India we focus on a lot. But we are bottom up because of investors.
Okay.
So that is our primary goal. So we keep in mind the macro. If there's a war going on, we are probably going to hold off on investing or increase our investing depending on what sectors are happening. But macro doesn't drive our thinking. Macro is one input into our thinking.
Define your style of investing. Are you a growth investor? Are you a value investor? Are you a high risk investor?
This is the only vehicle that we invest through.
Okay.
We are value investors. We are long-term investors. We often tell management teams what we think that they should do depending on our 20 years of experience in public markets. We are certainly not momentum investors. We are certainly not growth at any cost.
Okay. So give us an example of where have you invested in the last 5 years? What are your success stories and what have been your mistakes?
We have invested primarily in a few sectors: financial services, healthcare, business services, IT services.
Okay.
And across each of those sectors, we've had a fair number of successes.
Okay.
For example, we've had huge success in the luggage industry.
Okay.
Generally, those successes come out of where we think contra to the industry, where we're able to take a view on the promoter, on the business, and on the environment in India.
Why did you invest in this luggage company? What was the thought here?
Today, the Indian entrepreneur wants more. He wants to travel. He wants to experience things. He's moving up the Maslow pyramid. He wants to be seen walking into a meeting looking very good, very dapper. And so our thesis behind that is behind a higher end of consumerism. That consumer wants to go to the IPL. He wants to be seen carrying a nice luggage. And so we did a lot of work around the luggage sector. And we figured out it was a oligopolistic industry. That's beautiful industry structure. We saw that the market leader was actually lagging significantly, and the number 2 leader was actually driven to beat the number 1 leader, which is something we love because we want you to be driven for more than just making money.
I do have your, that lovely book in which you've captured your entire thought process, and some of the holdings are in public domain. So for the benefit of our viewers, if you can share that, what are your top 2-3 holdings?
Look, today we have the largest holdings in a bank called City Union Bank in the south. It's an investment where we made a year ago when we saw the bank had put behind problems that had haunted it for 5 years. It is now going ahead in terms of its customers from HDFC Bank. The second large investment that we have is a company called CMS Info.
Okay.
It's actually a cash management system company, but it's moving towards a SaaS company. We love the way the company thinks of its customers as banks and how to service them as opposed to cash management.
What is there on your avoid list? What is that you would say it's a big no, I will not buy this company, this stock. I just will not do it.
So we are, may sound very hackneyed, but we don't understand bad corporate governance.
Okay.
And we work very hard, but we don't want to see our companies down 20% the next day. So I think corporate governance, which means we run a fairly detailed AI check and a checklist on corporate governance. So that's something that we don't know how to handle and we will not go to, and I'll be proud to say that we have not had any cases of corporate governance in our portfolio. The second thing that we are very wary of is companies that may be doing well, reporting good revenues, but not necessarily reporting earnings to shareholders. So we like to see cash flows. There are two barriers to entry in India today. One is distribution. Second is access to capital. And so we want our companies to have both these things there.
I noticed there are no PSU stocks in your portfolio. I noticed that there are no defense stocks in your portfolio, at least from the private space. Now, post-COVID, this entire PSU space has seen almost like a gold rush. Anybody who's invested in PSU stocks, they've made money like bandits. Trust me when I say that. How did you avoid the temptation of not looking at something which was cheap, something which had momentum, and something which was right up there for grabs?
But we believe fundamentally that Indian companies are driven by promoters, and we've done a lot of studies on that. PSU companies do not have promoters in place. We believe in meeting management teams once a week, understanding from them what the forward of the business is going to be. We don't get that perspective from PSUs. We are here to build good companies. Along the way, we will build valuation also. That doesn't fit with PSUs. Your second question on defense. We believe that although defense is a growing sector, we acknowledge that. We do not have a clear understanding of the financials of the defense companies. What is the EBITDA margin? What is the actual sort of equation with the government? How these contracts done? We don't understand that. And where we don't understand, we're happy to step back.